What's up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others. Before we get into the analysis today, I just wanted to briefly touch on our new Leutheria Signals Discord channel that we just launched. So this is where you can get 24/7 unlimited access to all of the trading ideas that we at Leutheria have for Bitcoin and Ethereum as they come. So these include things like where we're potentially looking to go long, where we're potentially looking to go short, things like that. So check that out. You can email team@leutheria.com. In the description below, we have that email address there for you. We'll send the information over for you to get started and then hopefully welcome you to the group thereafter. There is currently a 50% off early bird special going on for that Discord channel membership for your first month. So check that out, and we hope to welcome you soon. All right, let's dive into Bitcoin on the weekly time frame. So Bitcoin on the weekly time frame here is kind of just seems to be sort of falling off a cliff here and kind of fading through this light blue support zone. Now this light blue support zone, we talked about this back here when we were up here. This zone is really only good for, one or two tests before eventually, it could end up dropping through that. The more times you test a support zone, the weaker it gets. So at this point, what the bulls have going for them is the declining bear volume here that's below average. So that's good news for the bulls. But this week they're really going to have to pull up here pretty soon if they are to, try and come up and form a higher low. A higher low. So the price action right now, the way that we're seeing it is we have this low here. We came up, we formed a lower high right here in comparison to this one, and now we're coming down to potentially form a higher low. And whenever we're looking for this, remember, we're always looking to see the magnitude of the previous move to see if it's more or less likely that we will form a higher low here. So this is a 27% increase. So for us to form a higher low here is not unlikely. Because that was a pretty significant rise in price, it is entirely possible that we do set a higher low, and then we come up to form a potentially a lower high or a higher high, depending on the magnitude of this drawdown, actually. So if we look at the drawdown, we've declined about 17%. So now if we come up from here to go to a new higher high, we would need to go about 20%. So that, because we went lower now it increases the chances that we are going to form a lower high and do something like this. Not a highlighter, I need the brush. So we come down, we form our higher low above this one. We come up, we form a lower high below this high. And then at that point, we're either going to come down and form another higher low and tighten up and then go for a higher high, or we come down after forming the lower high and just go to a new lower low below these lows, and then this light blue support zone turns into a resistance zone over time as we close a couple candlesticks below this level. So I'm watching that. If we look at other indicators like the Super Guppy, you can see that the price is kind of trailing through the green support EMAs here. Obviously not good news for the bulls, but given where we are in the market cycle, my personal opinion is that this parabolic rise is clearly over. And when we look at this from a weekly perspective, I think it's very clear that we're into a bear market now. It's just a matter of how long it's going to last and what types of cryptocurrencies are you looking to accumulate during that bear market. So right now, you can see that this support zone is pretty much last line of support before we go down to this light blue support zone down here, from a weekly perspective at least, which is down here at about 19,400. We've been talking about this level for quite some time. You know, and if you zoom out on this, I mean, this is entirely likely that this was the run. I mean, like this chart to me looks it's almost blatantly obvious that we're going to go down to 19,000 at some point in time. It's just a matter of when that's going to be. I think because of the magnitude of this move that, like I said, I still believe that it's more likely that we will bounce here and then come up and form a lower high and then potentially go down and break to a lower low. But we'll see. I mean, we could just break down from here as well. Let's go to the daily time frame and look at what we're dealing with there. So if we look at this from a daily perspective, you can see we're rejecting off of a fresh daily resistance zone that we had printed right here on July 14th. This is when we had our bear trend of our high, low, lower high, and then lower low, with both of these candle closes below the key low there from July 14th. We retested it here, and now we're rejecting off of it here. So now if the bulls are to try and make a comeback here, they're going to have to push through this zone and close two candles above this support zone to turn it into, this resistance zone to turn it into a support zone. And then we can start looking at potentially going up higher above that zone. The other thing to keep in mind is this gray zone back here from January 31st. This zone has been tested. This was like 9 tests before eventually we broke below it here. We just retested it right here, and then boom, we rejected off of it. So not very surprising there for that resistance zone. So now if we retest this is going to be pretty strong resistance. And the other things we need to keep in mind here are things like the EMAs, which are going to keep suppressing price every time that we come into levels like these. And then obviously the Ichimoku cloud, which is clearly right now in the most bearish scenario it can be in. So obviously also adding confluence to a strong bear trend here. If we go to a 4-hour perspective, last thing that we'll cover here, this candle closes in a minute, 30 seconds. Pretty weak bounce here from the bulls. Increasing bear volume here, but the interesting thing here is the RSI. If you look at where the RSI is in comparison to all of these previous lows here that were above this low, this is clearly the lowest low out of all of this entire price range. But you can see the RSI here is far above all of these lows back here. So that's interesting and something that I'm keeping an eye on because if we do end up coming up, I want to see kind of the velocity that we come up with in the next couple days. This is our main resistance zone that I wanted to point out on the 4-hour time frame. This white candle back here from the 19th. So this is when we had our bear trend of a high, low, lower high, and then lower low. So a very simple pattern. So whenever you see this pattern, this is the bear pattern. And this is the reason why it's bearish is because you have an initial rise in price, okay? Nothing out of the ordinary there. Then you have a low. Nothing out of the ordinary there. It's a sell-off, right? So that's like, obviously neutral to bearish if it's just one sell-off, independent of other price action. Then you have another high, but this one's lower than the previous high. And in addition to that, for this candle at least, this had a longer upper wick of people selling into the rise in price. So although the price rose up to about 31,900, it closed at about 31,600. So what that means is now that's our first signal that this is getting bearish because we had a high, low, and now we have another high, but the second high is not a higher high. It's not a continuation of the bullish momentum upwards. It's a decrease in bull momentum because now people are selling into the rise in price, and we didn't get as high in price as we did in the original rise right here. So then the last confirmation you need for that bear pattern is the lower low. and that's below this previous low here, and you need 2 candlesticks below that key low. So that's what you're seeing right here, two candlesticks on the same time frame closing below the key low here. And now that makes this level, the last area where people were buying the asset, a resistance zone for price on a retest. And the reason for that is because this was where people were buying the asset. So now that we broke down and we've confirmed the bear trend, the people that were buying here recognize that we're in a bear trend, and they say, oh, this gives me an opportunity to now sell out of my position at the price that I bought in at, or really close to it for a small loss. And so that's what turns levels like this into a resistance zone. So I hope that's helpful for you in finding resistance zones in the future. This same pattern can be extrapolated to any time frame. So if you look at this from a daily perspective, we just had this pattern as well on the daily time frame, and that's what gave us this red resistance level. So we have a high, a low, a lower high. We went just a little bit above the previous daily high here at 33,139, and we went to 33,187, and then we went for a lower low here with 2 candle closes below this key low. And that's important. The candle closes are important because if you just go below the low but you just wick below it and then you close back in like above the level, that's not a confirmed bear trend, because there wasn't enough momentum to actually close the candlesticks below it. So there wasn't enough bearish momentum to actually signify that, yes, indeed, we are in a bear trend. At least in my opinion, that's the way that I read trends. So then you can see once we close those 2 candlesticks below, we retest this. So as soon as this second daily candlestick closes, in my mind, this becomes a valid resistance level. And so now we retest this level right here, and very clear reaction off of this. I mean, this is like one of the easiest trades you've ever seen. So this is the way that support and resistance works. It's very simple. That's the bear trend that you're looking for there. And so I hope that was helpful for you. So if you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course. So this is where the people that are getting started in the crypto economy can really learn the foundational elements they need to get started generating consistent profits. So if you're just getting started in trading cryptocurrencies or investing in them as well, and you'd like to better understand how to analyze price action, and you like kind of the little miniature walkthrough that I just gave in this video, I think you'd really enjoy the beginner technical analysis course that we have on Leutheria.com, because we created it exactly for people like you. So this is so it can get you that head start that you need. So once you start learning about more advanced concepts, you're ready, you're primed, you already have the base level of understanding you need, and you can calculate really, you can make informed decisions when it comes to making entry and exit points for different cryptocurrency investments and trades. So we're currently running a 20% off discount for that course. There's a link for that in the description below, so check it out. And until tomorrow, onward and upward.